Hello, hi. Um, Today I'm just going to share with you a bit about the all the dramas that is going on right now, especially all the negative news. Basically, it has been non-stop uh, from the Ukraine-Russia war threats and federal rates hikes. Different banks are coming out with expectations of 7 to 8 times rate hikes of 0.25, which for year 2022, which should come to around 1.6 to 2%, which is in line with the market expectations. And then, of course, you have the recession talks as well coming in, whereby many companies that will have 2 quarters of lower growth compared to their previous quarters. So all these dramas, these three main factors, there's been talks every day about it. It's just too much drama going on right now. And of course, the next issue we look at is what are the safe play. Of course, Nasdaq and Russell's stocks, the techs, small cap, medium cap has been hammered a great deal, except for the Dow Dow Jones value stocks that are still holding strong. I will do another video later that it could be a value trap to park monies in safe stocks like uh, you know those S&P companies, and it's probably a good time to go into Nasdaq now, which they are actually selling at a discount. I'll go through one Cathy Wood's video on her analysis on this, i.e., saying that the growth of the tech stocks will outweigh the increase in the interest rates, whereas value stocks they would have quite a lot of debts in the company P&L, and their income will be affected, and their of course their PEs and all that will drop as well, and more likely to be the companies that are under the like not likely to enter into lower growth for successive 2 quarters, and hence go into a technical recession. So I just want to go into what are the safe bets, and I'd like to share with you a bit talks about VIX, which is always good to enter into stocks based on VIX index. Anything above 25 is good time to enter because as you can see, you will go down to below 20, and there'll be a good time to have some gains in your profits.
Whatever's going on out there, the VIX goes high. And right now, obviously, there's so much to be fearful of in this market right now. You got the Russia situation, you got the Fed, you got inflation, you got talk about wages are going to go insane, you got real estate trading high. You have so much right now that is put out to you, out there, and it seems like everything. Seems like everywhere you go on mainstream media right now, it is drama, and almost everything is seen from a negative angle right now. I had CNBC on for like the last hour or two, right? And I couldn't find them spinning anything positively. I mean, literally every single thing was spun from a negative standpoint, a negative angle. I couldn't find one thing. No, one thing was like, oh, wow, that's a bright something. Everything is coming from a negative angle right now. And obviously, the Russia situation is dominating this market. So when you have that going on, the VIX is going to be very, very high in that scenario. And that's exactly what we're seeing here today. The VIX obviously is up huge. I've seen it up more than 15% at some points here today. I think it hit around 32, right? When we pull up a 1-year chart, we're looking at a VIX that's around the highest we've seen at any point in the past year. And keep in mind, volatility's been pretty darn high lately. This is really eye-opening here, okay? What we're looking at now is a 5-year chart for VIX, the volatility index. And what you're going to find is most of the time, the VIX is going to be trading anywhere between maybe 10 on the low end and 20 on like an upper end. When you start getting to 30 plus, you're going to just understand you're in a very, very fearful market. And what we're going to see by looking at something like this is because we had such a massive shaking of the market when Rona came around, the VIX has been trading much higher than it usually trades. Because go ahead and look at 2017, basically up until Rona, and you're going to find the market was actually pretty darn stable, right? Yeah, we had a few time periods where VIX really spiked up, but when the market loves stability, okay? The market loves stability. The market loves any scenario where earnings are pretty steady, where wages are pretty steady, where unemployment's pretty steady. The market hates ultra volatility when things are moving around like insanity, right? Now, a lot of people ask me like how I'm able to hold so strong during.
Okay, so if you can see, this is a very interesting video. It says that the VIX index, volatility index, always hovers between 10 to 20. And then if you, in this 5-year chart, as you can see, it hit a high before of 50. Of course, now there are talks that there will be a crash coming in. Even though it could, if it does comes in, it's a good time to dollar cost averaging in. It's temporary, you can see. It's a short-term noise. It's not a flat line going through a long period of time. So it's good to buy the dip at this corner. And now if you look at 30, it's also a good time to buy because if you can see, majority of the time it hovers between 10 to 20. The volatility index, of course, has been enhanced by the Nasdaq because Nasdaq counters, Russell's counter tech stocks are going through rough times, PE compression and all the news coming in. And the line of thought right now is if interest rates goes up, it will affect growth stocks the most, which I don't 100% agree. It will affect value stocks as well. And in fact, growth stocks may benefit, from this rates increase and all that. So that's all for today. I'm just going to share. Peace. Please like my channel. Thanks a lot. Thank you.